Welcome to the Winner's Playbook with Steve and Josh. Disclaimer: the information contained in this podcast is general in nature and does not take into account your personal circumstances. Please head to the show notes if you wish to book a free 15-minute call to discuss your personal situation.
All right, welcome back to the Winner's Playbook. My name is Steve Sloan. I'm here with my co-director, Joshua Lee. Josh, we've just got back from the States, mate, from a very good trip with Inside Advisor. But how's your week been?
Yeah, Steve, it's been good. Well, we were away for 9 to 10 days together, which was that was tough. That was a tough gig being away for that long with you. But no, it was a really good trip. We're going to sort of unpack it in the podcast today. But yeah, big news on my side. I'm actually a month out from the baby arriving, which is it's all happening. So we had the 34-week scan earlier in the week. That's all clear. Baby's head and belly size is apparently tracking ahead. So it's a little concerning for Alana, my wife. But no, all is well. It's, we're in the final sort of stretch of the year, and the year has been a great one and lots happening on all fronts there. But, we're going to blink here and we're going to be at the back end of the year talking about 2025. So it's exciting and there's lots on the go. But how was life and the family when you got back, Steve? How did they welcome you home?
Yeah, look, my family's pretty used to my chaotic life, and my travel is immense at the best of times because I obviously live in Adelaide, live in Melbourne, and travel between the two a lot, and then Sydney, Brisbane, and overseas quite a bit to the Philippines and the like. So look, my family is very used to it, but it was good to get back to normal coffee and get back in the zone and get back with the team here in Melbourne. So that's been great. But mate, look, let's digest. We've had a big 10 days in America. Inside Network, who we travelled over there with, did a conference over there. It was fantastic. They got a lot of good people together. Some of the best advisors in Australia went on that trip, and we ended up meeting some of the biggest fund managers around the world, a lot of different types of fund managers in the world, which we'll talk about over the next couple of podcasts and the like. But if we dig into it and some of the key takeaways, and I think if we focus in on, as part of this conversation, the differences between the Australian market and the American market, which from an advice perspective and an investment perspective, what's your take on it? And firstly, where did we go? And then what's your take on it?
Yes, a bit of a snapshot of the trip. So like you said, there was about 40 of us advisors and business owners that went over there, a part of the Inside Network that put it all together. We started in Boston, went to New York, and then we finished in LA, and it was just action-packed from the beginning to the end. Starting off in Boston, I think the highlight for me there was getting into MIT, and we went through and did a tour of MIT and Harvard, obviously two of the biggest and best universities or colleges around the world. And we were actually fortunate enough to get a one-on-one sort of tour and walk through MIT with one of the professors there, which I think he was head of technology. And he was just mind-blowing. I think the first thing he said to us is, everyone pull out your phones, and then I own the IP, or I forget what it was, the IP to the phone screen. Yeah, the patent to the phone screen. I was like, all right, that's interesting. Yeah. So no, that was awesome, and we met a lot of good people over there in Boston. We had one of the dinners, and we actually got to meet some of the ex-students there that had launched their own businesses. And there was two students there, I'll call them students. They looked young, but they were in their 30s. One of them was working on, what was it, fusion energy, a energy source for the future. And the other one was Liquid AI, I think the company was. Yeah. And it was absolutely fascinating to see these guys and see what they were talking about and see the passion and the, what they're trying to do and change for the world. But it was also more interesting, I found, that there was a fund that we met with over there that actually sort of fosters and makes these relationships with these students early on to then take capital and investment into their ideas and be there at the seed, kind of at the beginning. And some of the valuations of like the business being worth, a couple of, millions of dollars, now being worth $1 billion is just insane. And there's not many people that are out there sort of looking around at some of this stuff. And the business that we met with is one of the only people that get out there and do it and get into the universities. And then they're part of investing that first amount of capital into these small businesses, which probably a lot of them amount to nothing, but there's a few of them that go out there and obviously change the world as well. So that was a big highlight for me in Boston, getting into MIT. That was really, really cool. New York, of course, we're at the mecca of the financial sector in the world, and we actually got to walk through Wall Street, which apparently is quite exclusive these days. You can't really get in there, and we were on the actual trading floor, so we got to do on there for the close. And that was that the New York trip was obviously quite heavy, and we're speaking with a lot of different funds, like met with JP Morgan, a lot of the big fund managers around the world, and really just got a bit of insight as to how money's moving at this point in time and what the investment landscape looks like. Probably not more so for your everyday average investor so much, but probably more for so for high net worth or wholesale type investors, which we can talk about in other podcasts, but really understanding of what other investment possibilities there actually are out there in the markets, as opposed to just buying your standard ETF or your managed fund that tracks the share market. This was kind of we were sort of lifting the hood into a different world there and getting a bit of insight into that, which is quite amazing, because some of the returns that they're chasing and can get and how they do it is very, very good. But again, those types of opportunities, they're not going to be for absolutely everyone as well. So New York, that was great, and obviously did a couple of the touristy things. Went and seen the bull on Wall Street as well. That was awesome. And then where did we finish? LA. So we finished in LA, and that was the biggest wealth conference in the world, FutureProof, and I think it was 2,000 plus advisors there. Yep. Which was huge. It was that 3 days back to back, a lot of different sessions. So again, a lot of businesses presenting, more financial advisors we actually got to hear from at the FutureProof conference, and kind of hear from what they're struggling with, what they're doing, what their focus is. And then through that was really able to, understand what they're doing better than us, and I'm talking about us as, the Australian advice industry versus, what they're doing over in the US, and where we're kind of ahead versus where they're kind of weak as well. So there's some really good key takeaways from FutureProof. And all in all, I think, the purpose of that trip, it was just to, first of all, get a bit of an understanding of the US landscape and what's happening, because we have clients that, want our advice all around the world. And we've spoken about it before, like, why can't we do what we do in Australia in other countries as well? But then also better improve just the service that we're providing for our clients and improve our business as a whole. So in a snapshot, that's kind of how the trip looked. But is there any other key highlights along that journey we had there, Steve? Although it was kind of all blended there together. Any other big ones for you?
No, I think this was really Omar's, a lot, further Omar's with investments, that's for sure. I think the clear theme that I took away from it, they're searching for good businesses to invest in. There's so much money to, invest capital, and they clearly want to invest capital, but they're struggling to find a place to put it. And that's clearly an issue for all these big institutions. We're talking Aris Capital, who we went and saw. They've got $365 billion. They're trying to find a home for millions and millions and millions per week. Where do they put it? And clearly for these big institutions, be it in America or Europe, for instance, they need to search constantly around the globe for areas to invest. So it definitely gave me comfort around the global theme that we've spoken about, and going global if we can. But that there's a lot of money out there, a lot of money to invest, and I think Australia will be a good place for them to put it. Clearly, just investing on the exchanges now, it doesn't work. There's I think that you spoke about this. There's only 15% of the companies around the world listed, and 85% of those companies around the world are not listed, which is quite a huge stat, right? So how do you invest in those companies that are not listed on the stock exchange, and how do you go find those opportunities? And that's what a lot of these firms do. They've got people on the ground in all different parts of the world, and their job is to try and uncover these opportunities where possible. So there was some very, very good presentations there. I, like you, got a lot of the tour of MIT and Harvard. I think realizing how those guys make money and how they generate income. And I think one of the stats was, coming out of MIT alone, was 3,500 companies have been born out of that university, and per year generate over $3 trillion from those companies. That's wild. An unbelievable stat, right? And it makes you think, why can't we do that in Australia? Like, what are we missing here? Why are they just doing it? Because you've got the best brains in the one spot, and they're just capitalizing on that opportunity. And I was just sitting there going, what are we missing here in Australia? Because surely we can do that here with some of the best brains we've got here. So that was cool. I must say, when we got to LA, and we'll talk about, and I think further podcasts we'll definitely talk about private equity opportunities that we looked into, unlisted opportunities. We'll talk about that in the coming podcast. But one thing about LA was definitely looking at the advice space in particular. I think the Australian advice landscape is by far the best in the world. You know, we've seen now the UK advice landscape, we've seen United Arab Emirates advice landscape, we've now been to America, and I'd have to say we're ahead of the game. You know, some of the advisors out here in Australia, not all of them, but some of them are definitely market leading in the world, so I'd suggest. So that was always good to see, get comfort on that. But I think Americans clearly with the investment space, they're ahead, and that's probably because of how much money there is sitting there to invest. They've got to constantly look at different ways to do it, different products to do it, different ideas. And I think that just the level of cash sitting there, it probably lends itself to that investment space.
Yeah, and that was one big difference I noticed. Like the advisors over there, they're definitely more heavily orientated and peg their value towards funds management, which is okay, but it's definitely not the only piece of the financial puzzle, I think. And but I think, you know, if I look at the similarities and differences, like there was a lot of similarities in it. By the sounds of it, it sounds like a lot of the advisors over there are starting to slowly transition to how we actually give advice in Australia, which is all sort of goals based, it's holistic, it's looking at everything. You know, you're not just managing a client's money or investing their money, but you're looking at all other aspects of their situation. And I forget who said it. It was one of the advisors over there said it, like clients don't pay you to get them above market performance. They pay you to achieve their goals is what they ultimately care about. But don't get me wrong, there is still definitely a market for just that funds management. That's certainly not going to go away. But I think to get true financial advice, you've got to be looking at all aspects of one's situation, which I think the US is going that way. But why do you reckon Australia is like ahead? Like what's you think it was just the regulation and how hard the market's just been hit over the previous years? It's kind of forced us to go there quicker than some of the others, or?
I'd say so. Look, I think the regulation piece has definitely made the Australian advice landscape a lot more robust than other areas. Like I know the UK market went through a Royal Commission similar to us, but from what I saw, they didn't get the outcomes that we did, and I feel like they're going to go through another Royal Commission over there. Whether they've been through, I don't think the Americans have been through that yet, and clearly they haven't, because in America, advisors are still half paid through commissions. Some are half paid through commissions and some are fee for service. So we're all fee for service in Australia. But I'd say that's a big part of it, but also our complexity. I think we've got a very, very, very complex tax system, pension system, superannuation system. Yeah, we've got a big superannuation fund, a very, very big pool, one of the biggest in the world. And I think all of that combined means that to give advice in Australia, you really need to be across absolutely everything when it comes to finances. You can't really do piecemeal. To give proper advice in Australia, you have to do full advice, right? You can't really scope anything out. So I think that all put together has meant Australian advisors at the top of the game really cover absolutely everything. And I think that is the key part of it. And the only thing, and that's why from an advice perspective, I think we're ahead of the game. From an investment perspective, though, because of just the level of money over there, it is a bit of a different ball game in that regard.
Yeah, and that's where the investment market piece is probably the biggest one. We'll start unpacking in some other podcasts around how that looks, because that was some of the stuff that just blew my mind. Like you said, over there, 15% of companies are only listing on a stock exchange and 85% are remaining private. So what that means for the average investor is you're actually not going to have exposure to some of the best and biggest upcoming companies around the world if you're only investing in traditional assets.
Yeah.
So if you're just putting in your regular ETF or in your super fund or in your investment portfolio, there's a good chance you're not going to have exposure to some of the best companies coming up unless you're looking at that alternative asset class. What would you for people listening, Steve, like what are alternative investments? Like what does an alternative investment class even mean? What are we talking about?
That could be a range. That terminology, alternative, it can mean different things to different institutions, to be frank. But in a nutshell, it's probably unlisted assets, But it's if you're talking unlisted assets, and then you're talking private equity vehicles, different types of credit vehicles, infrastructure funds that aren't listed, or you're simply just buying a ship. Like for instance, JP Morgan, we went and visited their offices, and they've got a fund where they just go buy ships or planes, right? Individual planes, and then just rent them to an airline. And that's how they make money. So there's a range of different alternative conversations to be had there, but pretty much if you just simplify, it's unlisted. It's not on the stock exchange as a company. It's an underlying asset. right? Or it could be an underlying product, to be honest. And there's the funny thing about alternatives, and one thing that really caught my eye while we were there were so many different categories to alternatives. Whether it's in the credit side of the fence, the equity side of the fence, direct product side of the fence, direct asset side of the fence. There's a huge amounts of different alternatives, and also there's new alternatives getting added all the time. So what's happening today, and I suppose that's why we've got to stay on top of all these things, and that's why these trips are so valuable, is because whatever's happening today is one thing, but like literally next week there's another round of new alternatives. So you got to stay abreast of that. And if you want to give your clients the best alternatives to invest into, we've got to stay on top of that game.
Yeah, and some of the returns as well on those funds, like most of those returns in the alternative space were generally like targeting 10 to 15% net returns, like after fees. But that sounds all good and well, but there's also other side of it that those types of investments, when they're not actually listed on the stock exchange, so that you can't generally trade them on a day-to-day basis. And that's what we can unpack in some other podcasts around how investing in that space, how that looks and feels, because a lot of them had a lockup of 3 to 5 year investment because you're buying into these new companies, so you can't pull your capital out for 3 or 5 years, which is certainly not going to be for everyone. But if you've got a bit of cash that you don't mind sitting aside, and you can you're not going to look at your investments daily because it's not going to be valued on a daily basis. And that's some of our super funds do that. A lot of our super funds, a lot of the big super funds over here in Australia, they have a chunk of unlisted exposure, and so they're putting their money offshore because it's where sometimes a lot of the opportunity actually exists. It's not in just the bubble of Australia, but a lot of that actually exists overseas. So I think crypto is also grouped in that basket. I did go to a session on the old cryptocurrency.
Yep.
And there's some pretty wild statistics in there. And I don't know, crypto is an interesting one, but that's also alternative. It's not something that's really regulated, and we advise on it. But I don't know. I think I remember reading an article that there was a super fund, I forget who it was, who was looking at putting it as a part of their sort of standard allocation in their portfolio, only a small amount. And I don't know, if you pressed me, I would say that's probably where it ends up going at some point in time in future, that every fund will have a small component, maybe 1 or 2% exposure to cryptocurrency, and it will be a part of that alternative asset class.
I'd agree.
And I'm not opposed to that. I don't know. I don't think I'm opposed to the idea of that, diversifying other assets.
Yep.
The way of the future, I think.
Yeah, look, you're right. And look, as I just said, the alternative space adding new ideas and products and scenarios every week. So what's to say crypto can't be part of that as well? So I agree. Yeah. I think crypto it definitely does have its space there somewhere. How big that scale is, that's probably still to be known. But yeah, it was very evident that when we were over there, how big this space is, and the search for where to deploy capital is an issue. Like they are searching for where to put it. And it's an ongoing battle because they've got so much money coming in per day and per week and per month. They've got full teams around the world to try and work out where to invest it. And I think, and we know that the Australian financial services system is actually now getting targeted by these international funds in from America because they see our space as very favourable. We're got very high levels of regulation. We're very well run. We've got an economy we've got a political system that's stable. We've got a good legal system, etc. So we're seen as a very good safe haven for these types of funds. However, our market is only so big. So there's only so much money that could come in here. We sat down at a table with a guy that flew in just to meet us from Dubai into New York. And his job was to go to the United Arab Emirates and try and find, private companies there to invest into for his particular firm. But yeah, it's an interesting space, and one I look forward to really unpacking over next couple of weeks for the viewers.
I think if they've got some spare cash, Steve, they could probably park it in my offset on my house, I reckon.
Could do.
They could probably do with a bit of that. But one thing I reckon was interesting, like I'd never been to the US before, but geez, we were really welcomed. Like I didn't feel like out of space at all. Like they were really like the US, the Americans seem to love Aussies. Everywhere we went, it was like super welcoming, and they just like absolutely loved us. Thought we have, spiders and kangaroos and snakes all over the place, and had to tell them that's not the case. But
maybe where you live, you do.
Yeah,
but,
maybe. Maybe, but I don't know. Was there any other, like, in terms of our systems, is there any other major differences? Like, I think superannuation system's obviously one of the best out there in the world, clearly.
Yeah.
Who else did we spoke to? We actually had a keynote from Kevin Rudd. What
Yeah.
would you be? How would you tell people about Kevin Rudd if from what we heard from him? I
Very
didn't mind his
charismatic.
speech. Yeah.
Very charismatic and down to earth, and told it how it is. And he's of the opinion, as Australians, we have a very, very good relationship with Americans, and take the opportunity. Like, think outside your borders, and if you've got something that you want to bring to the States, they'll welcome you with open arms. We've got a very favourable visa system between Australia and the States, and think outside your box and think outside the opportunity. But he was very good, but he also did say the world has changed. The geopolitical landscape, and we don't need to name names of who that is, but that landscape has changed, and probably for a long time now. So you've got to be careful with certain regions, but absolutely between Australia and the US, the relationship sounds like it's unbelievably strong, and take that opportunity where you can, I'd say.
Yeah, and I think you got like you said, you just got to watch, a lot of, geopolitical events and factors going on around the world, Middle East, over in Asia, and that just all correlates back to your investments. And just, yes, it's a set and forget, but you still want to keep an eye on things and shift things around from time to time, because that's obviously where the opportunity lies. And I think that what Kevin Rudd said in closing, I think he was reflecting on his life and his career, and he said he was never one to, not just get out there and have a swing and just have a punt, and didn't want to leave anything, to bed or rest, and had no regrets in life, which I thought was a great way of closing. And that's how we're going to close today's podcast, Steve. So appreciate everyone that was is listening, and I hope you are getting value out of it. And if you are, 5 stars on Spotify and Apple. You can check us out on all of our social media channels: LinkedIn, TikTok, Instagram, Facebook. Steve's got a newsletter that goes out every week as well. And if you do want to chat with any of the financial advisors in our business, you can jump on the website and book in for an initial call to have a bit of a chat about your situation and if we can add any value to it. But until next time, Steve, I'll see you on the next one, mate.
See you there, mate. Cheers.
Bye.